Pete Rizzo and his panelists, who are going to be looking at the other side of things again. So we're going to take a look at the venture capital money in the blockchain industry and the trends that are going on in that right now.
Great, thanks for the introduction, Jeremy. So yeah, Pete Rizzo, US editor for CoinDesk. Title of this panel is More VC Money Than the Internet. So let's look at blockchain fundraising and ecosystem trends. So I want to introduce the panel here. To my right, Scott Robinson, founder and director of Plug and Play FinTech. It's an early stage accelerator in Sunnyvale, California. Notable investments, Bitwage, ChangeTip, and Purse in the Bitcoin space. To the right there is Vanessa Colella, managing director and global head of venture investing at Citi, specializes in early stage startups with Scott here through partnership with Plug and Play, and then in late stage ventures. You guys might have seen the Chain announcement yesterday, $30 million fundraising there, and Vanessa was part of that. To the right again is Anjney Midha, founding partner at KPCB Edge. It's a new seed stage initiative at Kleiner Perkins, Caulfield and Byers, and he has yet to make any announcements, but has told me he is soon to do so. So last but not least, we have Jalak Jobanputra, founding partner of Future Perfect Ventures, early stage VC firm in New York City. You may have seen her in the news today. A couple big announcements: Abra, $12 million Series A, and then Case with $1 million follow-up to their seed round. So I guess I wanted to kind of start and set the stage here, kind of recalling some stuff from the state of blockchain this morning. I'm not sure if you guys were here for that, but good to recap. We're closing in on $900 million in investment in the Bitcoin blockchain space as of today. Big numbers. Some would say outpacing internet by some metrics if you look at the 1990s. And we're also seeing new big players kind of influence the space. So Capital One, NASDAQ, Citi, Visa, big names that 2 years ago might not have been people who would be anywhere near a headline with Bitcoin in it. But we've also seen VC funding declining. So Q3, not the greatest quarter for the industry. So I kind of want to talk about that. We're in a bit of an off period, it seems, maybe correlated to the industry, maybe not. And I think something to think about with that is, we've seen kind of this split in the industry right now. 70% of the startups that have been funding historically or currency startups, and now we're seeing a lot of movement towards, databases, distributed ledgers. So I'm curious if you guys, see this as a correlation. Is there a split in your mind? Where do you side on? Is the currency still interesting to you guys? Is it the blockchain? Scott, maybe you want to kick.
Sure. Well, I think it's important to frame the general financial technology space. So, 2013, about $3 billion was deployed there. 2014, 12, and we're on a clip to going close to 16 billion. And what's really interesting to us, and part of the reason why we've opened up our Bitcoin initiative to general fintech, is of the 12 billion in 2014, 1.4 came from corporate ventures. And so I think one of the areas I think is definitely indicating more activity towards blockchain is it took a lot of time for people to actually understand Bitcoin. So in the early days, I remember we'd have startups come to us asking how do we pitch VCs, and they would continue to say, I keep running into this problem where I have to explain the whole protocol and technology, and then we get to the conversation about what I'm doing with it. So there's been a learning curve in the past 2 years that I think has really accelerated to the point in which blockchain as a use case is now being looked at across multiple industries. But yeah, I mean, for us, we're certainly very interested in both.
So Vanessa, do you feel similarly? Is it for you guys more of an incumbent? Is it the currency? Is it the blockchain? Is it both?
I think similar to what many people have said on stage today, that it's so early in the evolution of this technology that we're interested in looking sort of across the gamut at what are the different applications. And I think what's most exciting about that shift in funding to not just currency-based applications, but much broader applications is it's the diversity of both applications and the perspective that people bring to what could you do with this technology that is helping to progress the technology so quickly, right? Someone earlier was saying, I think it was Adam was saying, everyone says it's going so slowly, but hang on, it's really only been 6 years, and we've made so much progress. And so if you look at it in that context, I do think that it's not just the magnitude of funding that's important, it's the diversity of types of ideas that are getting funded that will help progress the technology.
So Anjney, a bit of, you guys are just kind of entering with a new initiative. So do you see it as, are you more focused on the blockchain because it seems to be of the moment, top of mind, or are you interested in both?
So this has become the rally cry, right? Of like Sandhill Road is, I'm bearish on Bitcoin, but bullish on the blockchain.
Right.
And it's a false choice, I think. At the time being, you don't have any other way to go. If you believe in the blockchain, you believe in Bitcoin at the moment. Until an alternative ledger comes around with the same amount of traction, the same network security, the same kind of support from core devs, where else do you go? So sometimes I think it's a neat way to package up a thesis, but anyone here investing in blockchain companies that are using any blockchain at scale for, let's say, a transport layer are also tied to the value of Bitcoin. That said, I think we're all excited as geeks about what you can do with the blockchain, right? But until Litecoin shows up with much, much more support, I think you got to bet on both. And I think it's sometimes misleading to frame them two as mutually exclusive.
So Jalak, you've done more on the currency side, it seems. So
Not really, okay. No. When I first heard about Bitcoin and started thinking about the blockchain and the concept of a distributed ledger, my mind went straight to what I had seen in Kenya with M-Pesa. So I was born there. I've spent a fair amount of time in the country. And as we know, a lot of these markets outside of the developed world have leapfrogged in infrastructure and different types of services and the way they use mobile. And I thought, if we could create this kind of easy transfer mechanism, and it's really just a token, right? That's transferred. It can be a currency. It can be any asset. But if we just allow an easy transfer across borders and be able to verify that can be a game changer. And so my thesis has always been around that. And one of the things that was really exciting when I met Bill at Abra was that the Bitcoin backend was just very invisible. And that's really, especially when you're investing at the application layer and want to see use cases proliferate, you want to make the technology as invisible as possible. And it's really the user experience and the end result, more efficiency if you're talking about the enterprise, just ease of use for the consumer that really becomes attractive. And that's really what I look for in the sector.
Interesting. So I think we're also seeing, a trend right now, pretty similar, I guess, most industries. A lot of younger startups are having trouble scaling, and I think Bitcoin that's been compounded by the fact that runaway price growth, runaway user growth that you may have had a year and a half ago is really not there anymore. And a lot of startup founders are finding themselves in an environment where there are few investors. Most of them have made investments in the space, maybe in even a similar company as theirs. They're having a difficulty maybe finding a lead investor. Maybe there's this idea that because they were trying to be a more currency, more disruptive alternative startup than something that's attractive to the incumbents, like maybe they're kind of out of style or out of fashion currently. So Jalak, maybe if you want to pick up there. So I guess is that a fair categorization of the environment? What do you say to a startup founder who was in the space early and is just trying to navigate, steer the boat through the waters?
Yeah, I think everyone, investors, entrepreneurs, needs to be careful of the technology looking for a solution. I mean, the most successful entrepreneurs across the board are always ones that are serving pain points, and especially if you look at traditional venture, the traditional venture industry, we're looking for returns within a 5 to 10 year time frame. So, and that's why not every company is venture fundable. There are a lot of great ideas out there that may take a longer time horizon to realize that exit. So I always tell entrepreneurs that you need to kind of fit into that model and then really kind of prove what pain point and focus on that pain point and solve for that. And you could have the greatest technology in the world, but unless you're doing that, it's going to be very hard to get that later stage funding.
Mm. So Vanessa, I'm interested in your opinion on this. I guess as seeing someone, you guys do some late stage stuff. Probably talk to a lot of people. So I guess what is how are you evaluating these companies that are I guess have been in the space longer?
Yeah, so I mean, first to the very early stage entrepreneurs, what I'd say is thank you. We celebrate these entrepreneurs because they are taking big, bold bets on a technology that itself is really new, right? And so it sort of compounds the bet if you're a very early stage entrepreneur right now. And you're seeing that a little bit, as you said, do we place our bets just on currency, or is it currency plus or another application? I think one of the reasons that we were excited about Chain.com is, where are the companies like that are helping to build the tools and the approaches and the capabilities that will bring even more people into the fold, right? What you've got with blockchain is this great potential of a network technology, but as an entrepreneur, that means you can have the best idea in the world, and if you're too early, it's very hard to recover from that, right? You can't single-handedly build that network. So, what we look for are technologies that will help advance that whole system, both, as Debbie talked about earlier, for the experimentation that we do internally, but also as we think about companies and what's fundable right now. We're excited about that because I think that maturation of both the underlying technology and the understanding of those consumer pain points and where the solutions are really going to be, they're both going to have to happen before this gets widespread sort of mainstream adoption.
So Anjney or Scott, so hearing kind of that perspective on companies that you're investing on the earlier stages, obviously kind of hoping that those companies do grow over time. To kind of hear that there's the lack of clarity, maybe it's going to be very long term. So how do you guys deal with that reality and then place smart bets in that environment?
Sure. So, I mean, from our standpoint, Lending Club was a company that started in our building. We made a seed investment. It took 8 years to actually see something happen after that. It was a lot of work and effort that went into that. But the lessons that we've learned, and I think that's kind of how we're operating today, is we leverage a lot of our strategic relationships with the corporations we work with, so Citi being a great example. And we lean on their industry expertise when it comes to guiding our startup's technology. And we take a consortium model because we found the expectations as it relates to the startup to the corporation often can be misjudged or misaligned in the sense that, great, I'm in a such and such corporate accelerator, I'm building a product specifically for their business unit, maybe it's not a great market fit. And so that kind of collaborative model, which I think is really highlighted in this space, and we see this time and time again with the other folks that we're working with, whether it's Citi, Deutsche Bank, USA, Capital One, et cetera. We look at Palantir, and the reason why is when they first came out to the Valley, they landed a 10-year deal with JP Morgan Chase. And so our thesis is effectively, funding is great for a startup, but a Fortune 500 client is far more powerful.
Anjney?
I think what's changed is inherently from the folks who are attacking this space. If you look at the attributes that it takes to be a founder, bet everything you have, your family, your company, on a new technology like this, you're essentially a gunslinger. But while our natural sort of leaning is to, instead of asking for permission, beg for forgiveness, we're finding it's actually, we can help our folks beg for forgiveness, actually ask for permission rather than having to beg for forgiveness later. And so KP is lucky to have been around for a long time, has a lot of great relationships, a lot of great companies that actually end up being customers of folks. So if you're an SMB and one of our companies is, let's say, offering businesses a product, then we get to test that for a lot longer. And I think that's what you're seeing with the fundraising announcements. Folks are realizing it's okay to not announce your funding a week after you close it, because that gives you a lot more time to test things out, ask for permissions before you can go big, and basically figure things out before you realize that actually something that could have led you to scale under the cover of being able to test hypotheses, be in beta for a long time. It's okay to do that. And that might be one of the things confounding the trends you mentioned earlier too.
So we're going to go to an audience question right now that I think is pretty relevant and something we're seeing a lot is, so the question is by Jacob, is do you see a shift in VC funding flowing out of the US to startups in other countries? I think, one of the recent things that we've seen is that so far, while the technology has a lot of use cases in emerging markets, we have seen funding takes place heavily in the United States. I mean, you look at something like the Boost VC incubator, I think, their last class, maybe about a quarter, were startups from other countries, maybe even ones that had secured seed funding that maybe didn't have any other option other than to come here and to start continue building on their idea. So I guess where do you guys see that? Is this specific industry too U.S. focused? How does that change? How does that evolve, Jalak?
Yeah, I mean, this is something I look at a lot. Because when I started the fund, one of the thesis areas around it was that we're going to see more globalization of technology and more cross-border flow of capital. And I think this sector is really leading the way in that. Because if you look at some of the immediate, especially consumer applications of the technology, it's in regions where there aren't credit cards, there aren't banking systems in place, there's no real way to have identity or own identity, and this technology just fits in very nicely with some of those gaps. Whereas here, we have legacy infrastructure, and we've seen it in mobile, and we've seen it in the telecom market. I used to be a telecom investment banker 20 years ago, and it was with the cable infrastructure. We were very slow to get to where even Europe was on that infrastructure. So I actually think that we're going to see applications emerge in the emerging markets. I don't like that word because a lot of these markets have already emerged and are actually surpassing us in terms of some of the use cases we're seeing. But I think we're going to see both, and I like that balance. But we'll see different applications in different markets.
So I guess Anjney and Scott, you get into this idea, I guess, that should maybe someone from the U.S. be building solutions for an emerging market? Should those solutions kind of come from those markets? So how do you guys find international founders, and I guess do you think that they're best suited for those markets? And I guess how do you just manage that sort of balance?
Well, there's a lot of money to be made helping get bits across the U.S. and back in an efficient way. And so we're finding teams that are pretty compelling, that have 1 foot here, 1 foot over there. You often have product and eng distributed, which is usually challenging. But when you have customers on both sides that you need to support locally, that actually might end up making sense. So we're paying attention to folks, whereas before it might have raised a red flag in many other areas where it's difficult to run a distributed team so early at the seed stage that we're looking at. So in some cases, it's actually been a boon for companies. There's no other way around it, having local teams on both ends, which means you also get access to 2 pools of investors, right? So it's not a red flag or anything for us. It's actually, we find, sometimes a necessity for this space.
Scott,
I think, yeah, it's really important to have locality and region focus when working. And for example, if you look at Singapore, Australia, a lot of the payment systems are generations beyond where we are today. And it's one thing to roll out a product for $5.5 million versus 330. So we have interest from a lot of our partners, but it's not necessarily the same thing that we're seeing here, use cases that we're watching domestically. It's a huge market. I mean, Bitcoin and blockchain is a fantastic fit. Just that, looking at Indonesia as an example, 18,000 islands, 6,000 of them are inhabited. Doesn't make sense to have a brick and mortar bank at every corner, but everyone has a cell phone. 98%, internet ubiquity is expected by 2020. You ask a lot of these folks, do you have internet access? They say no. Do you use Facebook? They say yes. So I think there's a big opportunity there on the upside, and it's certainly the use case that makes the most sense immediately from the currency perspective. Remittance is a huge market. It's $565 billion on the formal channels. There's a lot of opportunity there. But yeah, to your point, we can't expect somebody from the United States to actually understand the culture and as it would relate unless you're there on the ground working this project. Right?
Vanessa, did you?
Yeah, I'd just say for us, Citi, obviously, we operate on the ground in more than 100 countries. We're present in almost every country. And for us, the ability to experiment across multiple geographies, especially through the distributed lab network that we have at Citi, I think is something we're quite interested in, because right now we're seeing core technology get funded in one geography, and to your point, right, it's very hard to really understand the customer pain point in a geography that you don't know much about, you read about it in the newspaper, but you don't have a team on the ground. And so we think that that we can help a lot of these companies, and we work with a lot of them as they're thinking about, how do I go into a geography? How do I think about that experimentation? And to your point, right, it's not just emerging market. Every market's got different use cases. It's got different customer pain points. And then you can multiply that as you think about moving stuff back and forth from one market to another. And so I think being able to tap into that global network of running experiments, doing tests is part of what gives us a broader view on the possibility.
So Vanessa, I'd like to stay with you here for a second and kind of bring back something that Anjney was saying about the gunslinger mentality of some of these entrepreneurs, and it seems like there's a bit of a clash between that and something like your industry, the financial industry, where there's a lot of regulation and a lot of compliance burden on these startups. It seems like there might be it might be antithetical to move fast and break stuff in that sort of environment. So I mean, I guess how do you see that, or do you still think there can be disruptive opportunities, or do you think incumbents, the Capital Ones, Visas that are coming in the space now, are they looking for something safer than these disruptive models that we might have seen a year or two ago?
Yeah, I mean, first of all, I think there's a lot of disruptive potential here. I'd say, in about a year and a half ago, maybe a little bit more now, we brought the CEO of a really prominent blockchain Bitcoin company to meet with our top senior executives. And I think for many people in that room, the most surprising thing was how savvy this CEO was about the regulatory environment, right? And we really see a very wide spectrum among entrepreneurs. Some people who are gunslingers, to your language, who are really just thinking, how do I go out there and push this as hard as I can? Some people who are extraordinarily savvy about existing regulation and are thinking about mainstream use cases, and therefore know that as this technology comes into the mainstream, it's not going to enjoy the advantages of being at the fringe, some of which are not everybody's paying as close attention to. When it comes into the mainstream, it's going to have to be more carefully regulated, because the kinds of applications that people are thinking about are pretty core to how the global systems work. And then you've got a wide spectrum in the middle of that of people who know they have to get there someday, but they're just not quite there yet. Obviously, as a highly regulated institution, we spend more of our time with entrepreneurs who are to the middle and to the right of that spectrum that I described, because first of all, it's very important to us, and second, those are likely to be the kinds of use cases that solve pain that our customers or our clients have. And so someone could be coming up with another use case where it's okay to move fast, break things, because it's just not going to be in such a regulated space. And so I think it's important, and it, like I said, was quite enlightening for all of us to see that there's a great diversity of applications and philosophies about how to approach this. And I know it does make some people in the community uncomfortable, because when it started out, I think it was more homogeneous in terms of people's philosophy about what the technology might bring to the world. And it's sort of the blessing and the curse, right? You've created a technology and a platform and distributed ledger that has so many possibilities, and once you get into that wide space, it's hard to keep it contained to a particular viewpoint, and we see that in the entrepreneurs we meet with.
So I'm curious, at the earlier stage level, do you guys feel a responsibility to kind of stick to those, that kind of early ethos, right? So you have Bitcoin and blockchains, they're a new innovation, they democratize financial access potentially in ways we haven't seen before. So do you see a responsibility to carry out those values through your investments?
The biggest forcing function are the customers. Right, so more than us being responsible, the customers are going to keep you, the founder, accountable for your compliance, right? If your customers aren't sure of whether you guys are in violation of a bunch of very, very early policy guidance that's still very, very early, then you're going to have a hard time selling to your customers. So even before we start having to sit down with folks and figuring out how we can get all the right compliance in, the founders have already done it, because the customers are asking them even before we've gotten to them, right? And customers are pretty savvy, it turns out, right? Customers want to understand how likely, what are the essential pieces of additional risks they're taking on as your customers when you've chosen the blockchain as a part of your stack. And I think sometimes we were really surprised by how sophisticated that process has already gotten, even before any external capital has been raised, before we come in at the seed stage. A lot of those questions have already been answered between the customers and founders.
And there's certainly a nuance to the fintech space. I mean, it's one thing if, say, Gmail goes down and some sensitive information is lost, but if you lose somebody's money, that user is never coming back, ever. And in fact, that user probably has like a multiple with it to say, this is who lost my money, don't use them. So there's a huge implication with just dealing with finance in particular. We work with many, I'd almost say we're kind of pre-seed in the sense that we make almost 150 investments per year, but it's very small, and a lot of the bets are based on the person. And I think one of the big trends we're kind of tracking now is the talent that's coming into the space, and Blythe is perhaps the perfect example of somebody that's come from mainstream institutions and takes that paradigm and applies it to the technology that we're seeing. And from a regulatory perspective, I mean, AB 1326, for example, had a very interesting clause in there in which they recognized the multi-signature. In other words, they saw the need to recognize non-custody of funds. And so these two things go hand in hand. With the early stage investor, we take bets, it's a high risk, high reward. We jokingly say we're plug and pray. And we do 100 of these per year for the ROI to come back. But I mean, yeah, there's certainly a gunslinger mentality out there. We've seen some pretty screwy ideas.
There's a lot of support coming in from different kinds of folks. SVB is a great example, right? They do a great job of sitting down and figuring out what does it take for a blockchain company to get banked. A lot of great law firms are putting together resources on what does it take before you go out and raise a term sheet to make sure you hit all the compliance bars that all the venture firms are going to ask you about. And we work SVB is right next door, but there are a lot of other firms that are starting to come together and say, well, all the service providers that usually, you go to for all your services are already getting pretty smart about this.
I would say I've been investing in the space for a couple of years now, and I'm very kind of impressed with how kind of the core development community has evolved, as well as how many more people have come into the conversation. And I think if you look at the ethos behind the Bitcoin and distributed ledgers, it's very much to create a better world, right? And you can do that in multiple ways, and it's not just restricted to one vision. But I'm seeing so many different entrepreneurs and developers really kind of focused on that angle and kind of creating. Using this technology to create more efficiencies, more access, better identity mechanisms, and that's what I've really been encouraged by.
So you mentioned the development community. I guess when you guys are placing bets in the space, I mean, is there a confidence in the technology? We've seen Bitcoin. One of the panels today was about the kind of governance issues there. And there's a big split in the community about where it's going, how to run these networks. Does that sort of color how do you, I guess, make confident choices in that environment?
Well, I think it's so interesting because we're talking about a consensus mechanism, and the governance is by consensus too. And so it's I always think about like India being the largest democracy. It can be messy sometimes, but it moves forward, and people get their say. And I think if you look at something like this. Again, I'm encouraged by the process I'm seeing. And what happens is because we have social media and there's so many outlets now, if I look at the development of the early internet, this is much more out in the open, and the conversations are much more out in the open. But I think it's healthy overall. And at least I am encouraged by what I'm seeing in terms of progress on that end.
So Vanessa, the same thing from maybe a larger perspective.
Yeah, I mean, from obviously a very different perspective, I think our view is that as you're getting different voices in this space, you're seeing a lot of positive evolution. I think it goes back even to the regulatory question you were asking, right? People have gotten on the investing side and certainly on the large company side, much more well-informed about the promise of the technology, and concurrently. The community has done, I think, an outstanding job of getting much more versed in, what are we going to run up against, and what might this look like, and how do I need to satisfy the requirements of my customers, and how does that play into, the ultimate end user application that I want to build. And I think you're seeing both of those happen together, which is really encouraging. It does have a lot of parallels to the early internet, but I like the point that it is more out in the open. I mean, in the early internet, you didn't have a big room full of different kinds of people talking about those issues. It was pretty cloistered. And I think that's maybe part of why the evolution is happening so relatively rapidly in this space is that diversity of voice.
So Anjney and Scott, so new regulation in the space, bid license. There was a stat today, 100K, just to operate in New York. So does that change, I guess, how you guys are funding at the earliest levels?
Seed stage-wise, I think that's still a secondary concern. The idea is if you find a team that you have conviction in and a technology that on our end, the technical piece is pretty important, right? At the seed stage, you really want to make sure there's technical defensibility. In our case, the way we get that is we forked Litecoin for we have our internal ledger running called EdgeCoin. One of my partners, Ronil, ran a Bitcoin company, and we got him to join us. So there's people who on staff at the venture fund that they've actually pushed and developed several of the libraries that are on GitHub. So that helps us get technical defense. And then once you spend time with the team and understand their customers, you have to essentially take for granted that once you get involved, you'll help them figure out the bit license is announced this month, right? I don't think you can say we're not going to back a team that we really believe in because we don't know if they can get a bit license or not. It's our job to help them navigate that space after we've gotten involved, I think.
Cool. I think we are unfortunately out of time, but I'd like to thank you guys for participating, and
Thank you very much, Pete, and all those panelists.